All right, and welcome back for another episode of Carnivore Trades. Today is Monday, December 5th, 2022. If you've not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into the markets here. So Spider's down just under 2% on the day. Same thing with the triple Qs there. Dow down the least, down 1.36% currently. Russell taking a pretty good hit here as the IWM is down almost 3%. So a pretty good dump there on the Russell today. Still kind of stuck in this range here on the daily. You could still make a case it's all just bullish consolidation. If we look at the weekly, you still have a a green bar there and then kind of a bullish inside bar on the weekly, but Russell notably on the weaker side today. And the spiders are getting a little bit of a bounce here off the lows as we come into the close. Just about 3 minutes left in the trading day. How do we break this down? So really the reason for the selling today, at least currently, is the 2-year. So the 2-year is backing off again, down 24 basis points to be exact here on the day. And the reason this matters is because essentially this pokes a hole in the inflation has peaked narrative. So if the 2-year starts backing off again, that's going to really put more pressure on the Fed to continue hiking. And obviously the market at this point, the story for the market the last couple of weeks, really the last month, ever since that the CPI gap up back in on November 10th, so it was almost a month ago already. The story has been, well, the Fed's going to hike one more time, and then it's over with, and then they're going to pivot, and everything's going to be fine. So obviously the 2-year getting beaten down pretty good pokes a hole in that narrative. So there's your reasoning there. Also TLT, I told you guys 106 and change would be some resistance here. That did back off, although the 30-year backing off isn't quite the same as the 2-year backing off. We're starting to see a little bit of a shift in the dynamic now. TLT green does not necessarily mean it's not necessarily a good thing anymore, because the TLT, the 30-year bidding up could be bidding up because of recession fears as opposed to inflation fears, which has been really all year long the reason why it's been selling off. But in any case, 2-year backing off. I told you guys the TLT was into that resistance level on the weekly, and it's seeing a little bit of backing and filling. The yield curve right now, 2s and 10s, is inverted down to 80 basis points now. So that's basically at the lows of the year. 3-month 10-year is getting a little bit of a bid, so a little bit of a split tape there, but that 2-year backing off is the reason for the market coming back in. Now, is this major? It's really hard to say. Take a look at the volume here. So we have a big up move, right, on heavy volume. Same thing a few weeks ago, big up move, and then sideways to negative pullback with lighter volume. So really, from a technical standpoint, there's nothing terrible with this. It just looks like backing and filling to me. It just looks like we're kind of just retesting some of these areas here. If we look on the intraday, you can basically see, we just tested this 100 moving average here on the hourly, and essentially got close to that pivot there from last Tuesday. So just some backing and filling, if you ask me. Also, if you guys follow the ES, we're pretty close to that rising wedge lower trend line and that 20-period moving average. Maybe we even test it tomorrow, kind of just peek through it. Wouldn't rule out a little bit more downside tomorrow. But for right now, this doesn't look like anything terrible, and the market still can trade higher. So when you see, again, a big volume up move and then sideways to negative price action with declining volume, that usually tells you the market does want to go higher. So I don't see any problems at the current time. We're also seeing a little bit of outperformance from the semiconductors, down just over 1% versus the spiders, which was down almost 2% on the day. And again, you still have kind of an inside pattern here. You can make a case this is all just kind of bullish chop at this current time. So semiconductors holding up well. On the other side, the transports are not. So the transports back below this trend line here, and that really needs to change tomorrow. This can be we've been talking about this the last couple of weeks here, and there is a closing bell. We'll talk about the spiders close in a second, but we've been talking about this the last couple of weeks. That up move, a high and then a lower high here. That's a pretty good dump on the transports, down 3.25%, and they closed really at the lows of the day. So take a look here. That basically barely off the lows versus the spiders, which, well, I guess they barely closed off the lows as well. So that is a little bit of a red flag here. So semiconductors are outperforming. That's kind of like 1 out of 2. And I want to see the transports outperforming too. And that's definitely not the case. In fact, here's another red flag. You close below that breakout bar, right? So this was the big, Jerome's pivoted. Yep, it's all over, recession canceled. And now the transports are saying, well, we're below this level. So, you know, what does that say? So you gotta pay attention to these things here. And again, we look at the Dow theory. We talked about this in the weekend video. Dow Jones Industrials, higher highs, and Dow Transports, lower highs. If you take out this pivot, that's also going to be a red flag. But that said, still, right now, you can have those divergences for a couple of weeks at a time, but eventually they will play out. So short term, the market still can hold up. Okay, so want to make that clear. Everything I just said in the previous part of the video, market can hold up short term. We still can push higher, but these divergences will start to play out. And again, the semis, they held up today, but still, you know, high equal high versus the spiders making higher highs on the daily time frame. These are red flags here. They will come up shortly, but for right now, the market can still hold up. Triple Qs here. Again, up move with good volume, declining volume on the pullback. So nothing terrible right now. I think the triple Qs out of the major indices right now probably have the most upside here in the short term, just because they have to play catch up to, you know, we look at the industrials. They, you know, I've had such a big move here, and this is getting tired if you ask me. Just look at how it's kind of declining. You can even see it right here. I know you guys who follow RSI, but you can see it with your naked eye sometimes. Take a look here, high, and then basically an equal high, and now you're actually making a new RSI low, you know, with advancing price. So the industrials here have the least amount of upside. I can see the Qs kind of playing catch up again, still maybe to that 300 handle. There's a lot of resistance up there, the 200 moving average, this upsloping trend line, this downsloping trend line. So if we were to bid up, that would be your logical kind of target in the near term. But in any case, as far as today is concerned, nothing terrible here, although I will say the transports are a bit of a concern here. I knew that they were down earlier, but seeing them close pretty substantially lower today, and especially back below that trend line, that is definitely a concern. Anyways, cloud software, IGV, again, still unable to break out. So again, high, lower high, so cloud continuing to show weakness. A close below 258.36 takes you below the breakout bar from last week. So again, that would also be a red flag, especially for tech. And then below this low here, 256.49, that would be even worse. And there's a big air pocket right there. Huge gap to fill on the IGV. Ultimately, I think it fills it no matter what. But for right now, that would be kind of the area, you know, the last line of defense here in the short term for cloud software. So we talked about transports, interest rates. So 10-year up 2.65%. Again, getting a bid here. That's the reason the market is pulling back. 30-year here, also holding that 100 moving average there. So it's holding up well. We talked about the 2-year. We got to watch this trend line. So you have that inverse head and shoulder pattern right there, and it's still valid. I'm just going to put this in here so everybody can visualize it. But, you know, I'm just going to take your price target, and we still have not quite satisfied it. So there's still a chance you can get up to this area here on the 2-year, but if you close below this neckline, that pattern is now negated. And that would, it's telling you that the 2-year is going to go a lot higher as far as the yield, which pokes a gigantic hole in the inflation has peaked narrative. So just be aware of that. Anyways, Homebuilders here, a little bit lower here on the day. Nothing terrible. You basically closed right at that 200 moving average. You tested the 20 moving average as well, so nothing terrible right now. ITB outperforming just a little bit more, same kind of pattern there. Nothing terrible at this current time. VNQ also backing off. It's going to take a surge here. This is still kind of, you know, this is still your price target up here, but I'm not sure how much upside is really in the market, even if we do, you know, even if this bullish pattern here on the spiders does play out. The VNQ still got a lot of ground to cover, so it's going to take a pretty big surge to get up to that area here. I feel like the clock is kind of ticking on it, but for right now, just a pullback pattern. You tested the 20 moving average essentially, and no real issues currently. XLF here outside. So here's another little red flag. XLF below the breakout bar. We need financials to, financials have been leading, right? They've been leading off the lows. Take a look at broker dealers. Been leading off the lows really ever since June. They've been leading. That's starting to change here. Pretty good outside engulfing reversal there on XBD. Take a look at Goldman, which I am short, by the way, just full disclosure. This one barely got saved by that green bar there by the end of the day. So this is an outside candle here, and if this closes below that, that's a failed pattern there on Goldman. JPM didn't quite get to my 140 target, but take a look here. In 1 day, in 3 days here, you've wiped out 3 weeks worth of consolidation, and we closed below that pivot there on JPM. So financials starting to show a little bit of concern here. And the XLF again, if recession's canceled and the Fed's pivoting and everything's so great, then why do we have the transports and the XLF closing below that breakout bar from Jerome's supposed pivot? Questions that you got to ask. So in any case, this would be like the real danger pivot here. So below 34.76, if you close below that, that's probably going to take you right down to that gap fill there. But for right now, it's technically safe. It's just that's a major red flag that we need to keep an eye on moving forward. Crude here, nice outside day down. Again, testing that 20 moving average and a pretty good rejection there. Again, crude is, again, if you ask me, it's still kind of, there's a bit of a dynamic shift here, and again, kind of goes towards that TLT thing where we've got the market starting to price in recession here, and I think the market's concerned about oil right now, and that's really what it comes down to is, if we have a recession, especially a global one, is demand going to drop? And I think that's what the market's looking at near term. The market doesn't care about 5 years from now where there's going to be CapEx problems, which there will be, but in the near term, the next 6 months, if we have a recession, that's going to be a huge problem for, some of these commodities and energy. XLE also lower low today. It actually closed below this green bar here. So we got to close below that pivot, not quite below this pivot though. They just saved that one. Ultimately, I think this wants to test 85 in the near term, and then probably go back to 82.50 where it has really good support. But again, XLE down 3%, so leading to the downside. Remember, XLE has been leading to the upside, and now we're starting to see it lead to the downside a little bit. XOP, big outside candle there, all the way down to the 100 moving average. But look at all this chop here. It was trying to consolidate bullish. You had a big up move trying to consolidate bullish, and then boom, just got broken down in one session essentially. OIH, gap and crap, outside day engulfing reversal. So big move there on OIH, and for what it's worth, a little uptick in volume there, above average volume for sure. So again, OIH, some of these energy names starting to show a little bit of weakness. Take a look at Nat Gas, down over 10% on the day. Again, these are the types of things the market is looking at right now. Now I still think Nat Gas is a bit of an outlier, just because the supply side is so bad. It's even worse than oil. There will be a little support at 550. I'm starting to work on levels with this one. I think if you get down to $5, it's basically an all-in buy. Like have a no-brainer support area, and that should be a really nice trade there. I will look to take that myself if we get down there quickly. But the point is, you're still seeing kind of the market look at this energy stuff, and they're looking at bonds and say, okay, well, wait a minute, what's the upside here over the next 6 months versus the next 10 years? So, any case, nice gap down there on Nat Gas. We'll see how it reacts at 550 tomorrow, but a pretty good sell-off there with good volume there on the futures. Anyways, over to the dollar index. So again, dollar getting a bid here with yields up 0.75% on the DXY. And basically, it just stalled out at the 200-day moving average. So it's trying to hold that here. Ultimately, I still think the dollar wants to make one more leg lower, but that's it. After that, I think it's a pretty good buy here. But for right now, the dollar got defended, and we'll give it the benefit of the doubt for now. Gold, obviously, making a new high today, but down with a strong dollar. Again, you went straight through that 200 moving average. And you're getting a rejection there. I do think gold can put in a higher low here in the near term. Silver almost got up there, got up to 23.69, almost got to that 24 handle there, but pretty good reversal. So we did take profits on our SLV last week, and that looked like a good decision after today. So this probably wants to come back down and test that 20 moving average here, maybe the 200. in the near term. It's a pretty good engulfing, well, not quite engulfing, but it's a big outside day down on silver. I believe the SLV, SLV wasn't engulfing either, but either way, good sell-off there. I do think this can put in a higher low at some point, though, and it will be a buy in the future. Anyways, platinum here also outside day down, and lost the 20 moving average for the first time since really mid-October. So a little bit of weakness there. We'll see if it wants to go test that trend line, this upsloping trend line going back to basically September 1st. And it also coincides with that 50-day moving average. So that would be a logical area on the downside for it to go target. Then copper here, possible lower high in play now on copper. And again, we talked about you really need to close above 396 here on a weekly basis to negate this breakdown bar. So for right now, we could have potentially weekly lower highs on copper. So that is something definitely to keep an eye on. And again, if the market is worried about recession, copper is definitely going to start getting weaker to the downside. Anyways, Bitcoin here, I just can't get any follow through, right? So we had a nice bullish pattern here. It tried to break out, got all the way up to 17,425, and then kind of just right back into that little channel there, that inside bar. Pattern's not broken yet, but you don't want to see it continue to the downside here, especially a close below 16,429 is really going to set you up for more downside here. But ultimately, still, we have a bearish pattern here, move down, sideways consolidation that is still bearish for Bitcoin, and you guys know my thoughts on that. Anyways, big picture in the near term, spiders, not a terrible move here until proven otherwise. If you close below this green bar low, that's a huge red flag, and it could induce waterfall selling, especially if we do it on volume. Right now, the transports and XLF are flashing some warning signs, but for right now, as long as you hold up and as long as the volume stays light, I give the market a little bit more of an upside bias. But for right now, we are seeing sort of some cracks in the armor, so to say. Anyways, guys, I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.